Hi traders, I'm Jared Levy and welcome to another edition of Trading Tips brought to you by First Hour Trading. Today I'm going to show you guys a really cool technique you can use as stock traders to get a gauge on just how much a stock will move over its earnings report. This is huge because a lot of times you never know just how volatile or non-volatile a stock is going to be during its earnings report. Obviously, there's a lot of variables here, but the options markets can provide a great free look for us basic stock traders into an earnings report and just how much it's going to move. You don't have to be an options expert to trade this way or to use these techniques. It's very, very simple, very straightforward. Let's take a look at what we're doing here. Again, the goal of this technique is to predict roughly just how much a stock is going to move over earnings. You see, the reason why this works is options market makers and options traders, they place bets essentially. When stocks are getting ready to report earnings, options traders are making bets on whether it's going to go up or down or stay neutral. And as that price discovery is happening, options develop their own price. You don't have to be a mathematician to understand this, but the simple explanation is this. With all the traders coming together in one place and buying and selling options, they discover or create, if you will, a fair price for just how much they believe, and this is the smart money, how much that stock is going to move. Most stock traders do not use this information because they don't know how to, A, how to get it, it's really simple, and B, they don't know how to interpret it. I'm going to show you today how to do that, okay? Because the options markets are so efficient in terms of getting executed and being able to place very large trades, they are a breeding ground and a hangout for a lot of the biggest, smartest, and in my opinion, some of the most savvy traders out there. Are they right all the time? Maybe not, but you know what? After 20 years or so, just about 20 years rather, of doing this and trading options and stocks, I found that the options markets are fantastic for giving stock traders some inside information. Really important, guys. The information I'm about to show you, it can be found on any website. Your broker's website, you can go to Yahoo Finance, Google, any website you choose to get information. And all you're going to be doing is looking at the front month or closest expiration of options. And we're going to be looking at something called the straddle. Okay, I'll explain what that is in just a second. The point of all this is to figure out just how much the stock may move over its earnings report. That helps you to set your stops. It helps you to maybe remove stops and just sell the stock. It also helps you to adjust your allocation. Let's assume that you own 1,000 shares of this stock and the options market is saying it's going to move 10 to 15% over earnings. That move might scare you. You might say, you know what? I've got a lot of money at risk here. I might want to sell some of my position, scale back a little bit, and maybe, if the stock goes wild, I'm not going to get hurt as badly. So this information can be used in a myriad of ways. If you're more of a risk taker, you might say, you know what, I've got a very bullish opinion on the stock. The options markets are saying this stock can move, is going to move roughly 15%. That's a nice gain for me. That's a potential gain that I want to take a risk on. So again, there's really a myriad of ways that you can use this technique. Let's take a look at an example. Pandora Media, you guys should probably be familiar with this company. Obviously a newer tech company, very, very popular amongst traders. Well, back when Pandora was about to report earnings in late November, I looked at their options and wanted to see if they indeed predicted the move of Pandora over earnings. Back on the 21st of November, just one day before the earnings report, the stock was trading at roughly $29.63. We'll call it $29.50 for argument's sake because that's pretty close. The word straddle I used earlier, all that means is the combination of what's called the at-the-money call and the at-the-money put. That's what the ATM stands for. At-the-money are the options that have a strike price. Again, you'll see that in your broker's website or on a website. You'll see that spelled out, the word strike price, that is close to or at the current stock price. If Pandora is trading at $29.63, the closest strike price is most likely the $29.50, only about 13 cents away. If Pandora was trading at 30, we might be looking at the 30 strike straddle. And again, remember, the straddle is the combination of the call and the put, both with the same strike. So in this case, these are real prices taken on that day. The call, the mid price between the bid and the ask, was $1.65. The put price, mid between the bid and the offer, was about $1.53. I just rounded up there. Obviously, it was $1.5250 if you really want to be technical. The thing to remember about this technique, guys, it's quick and dirty. It gives you a good idea. Don't worry about playing it to the penny, but as long as you have a general idea of what the options markets are pricing in, you're way ahead of most stock traders out there. So in this case, we're looking at options that expire in 2 days. Remember what I said earlier. When you're looking at the straddle, look at the options that are closest to expiration, okay, but are still within the earnings period. So for instance, if earnings are in 2 days and you have options that expire in a week, those are just fine to look at when you're looking at the straddle. All right, let's move on to take a look. This is really fascinating. So real simple math here, guys. The 29.50 strike, remember that's the one we were looking at. So the 29.50 straddle costs us $3.13. So you can kind of stop right here, and real quick and dirty, you can see that the options markets, for the next 3 days are predicting a move of about $3.13 in Pandora's stock. Remember, that's up or down. Okay? All you need to know as a stock trader is that there's about $3.13 of volatility built into this stock for earnings. What does that tell you? The options markets are pricing in a $3.13 move. Well, to take it a step further, if you want to get technical here, look at the 313, take that number, that's the straddle cost, and just divide it by the strike price you used. The 313 is how much that straddle would cost. The 29.50 is the straddle that we were looking at. That's a strike price. It gives us about a 10.5% move. So again, to sum this up, back in November, 1 day ahead of the earnings report, options markets predicted, with, let's call it about an 80 to 85% probability, the stock was going to move roughly 10 to 10.5%. Okay? Now remember, the key here is to focus on those options that are really close to expiration. You don't want to look at straddles of options that are expiring way out in time. You want to look at the close ones because those are the ones that are going to tell you just how much the stock is going to move our earnings. Let's see if it worked. This is really cool. So if you look here, back on the 21st, when I was looking at this trade, the stock was trading at around $29.50, $29.60. The low for that day was $28.25. If you remember, the straddle was priced, let's call it $3, right? We can round down, $3.13. Let's round down. The next day, earnings were reported on the 22nd, and really fascinating here. The stock rallied early on in the day, hit a high of $31.50, so it added about $2 there, and hit a low of about $28.50. Look at the range here. And again, it doesn't take a mathematician to see this stock moved about $3 during the day, right? It's almost uncanny, and I didn't make this up. You can go and take a look at a chart and even look at historical options prices. This is really fascinating. So we got a $3 move. The options markets were dead on. Now, if you were a trader that owned Pandora, you sort of knew your risk coming in. You could say, you know what? Options markets are pricing in about a $3 move. I can handle that because I'm in Pandora for the long term. If you had just bought Pandora, you were up $1 in your trade, and you saw the options markets pricing in a $3 move, you might say, you know what? I've made $1. Maybe it's time for me to sell because if the stock moves $3 against me, I'm going to have a problem. As you can see, Pandora over the next 2 to 3 days continued to trail off, actually hitting a low of $27.25, about $2.25, below the point of entry price. So the lesson learned here, options markets did predict with reasonable accuracy just how much Pandora would move. And in fact, if you test this method out on stocks that are reporting earnings, you'll see that options markets have a great way of showing us just how much volatility is going to be in an earnings report. Again, may not be 100% accurate, but it could sure give you an idea of just what you're getting to in earnings. Again, I'm Jared Levy. This was Trading Tips brought to you by First Hour Trading. Please check out the website, www.firsthourtrading.com. There will be a link posted up against this video, and I hope you guys all have a fantastic day. Happy trading.